Hi, everyone. I'm having today with me Klaus, Emmanuel, and Dennis with their very festive themes in the background. So I'm on a stage, head of business development at Defactor, and I'm very delighted to have our speakers today join me for this end of the year review. We have had amazing projects interact with us with Defactor and also with our newly launched data platform, RWA.io. So I'm very pleased to have all the three projects having been verified on the platform and showcasing their data. And today we're going to dive a little bit deeper into what we've all experienced this year, what we're looking forward to in the 2026, and also touch a little bit about the data topics and why this is something that we want to focus on in the coming year. So without further ado, I would like for you guys to introduce yourselves and the projects, and then we can dive deeper into the discussion. Klaus, how about we start with you?
Yeah, thank you very much for arranging this and inviting me to present. It's a great pleasure. My name is Klaus. I'm the CEO of DigiShares. I have been in the crypto industry since 2014, where I made my first Bitcoin investment, and then sort of slowly got introduced into the space. So in 2018, I started my first company in the space, maybe 2017, which led to DigiShares after 1 or 2 years. So we started developing the DigiShares platform in 2018, I think. So we've been around for 7 years, slowly developing a white label platform for RWA tokenization, which is highly customizable and can be configured in many ways. And we sell it globally, right? So we are primarily a technology provider. We've got around 250 clients globally using the platform to tokenize many different kinds of assets. 80% of them are probably working in the real estate space, but there's also commodities of different types, energy projects, equity bonds, funds, and lots of interesting stuff. We are a US and Danish company. We have departments in both places. That's it for me. Thank you.
Thank you, Klaus. I guess Dennis, you'll be next on my screen.
Yeah. Hi, everyone. I'm Dennis, co-founder at Liqvid Protocol. Yeah, thanks for having me here. Joined the space in early 17, quite well known, I think, because previously I launched Asterism, which is a cross-chain messaging infrastructure. So we connect chains, let them exchange data and assets. So we have our own omni-chain infrastructure now across 30 chains. So talking about Liqvid, what we do, actually, we connect capital allocators such as multi-strategy funds, treasury managers, family offices with deal originators, meaning asset managers operating in mid-market private segment. So we don't do public markets, we don't do real estate. We focus on this mid-market deal size ranging from 5 to 150 million. This is our focus, and this asset class is actually sitting under radar of giants like Apollo, KKR, Blackstone, BlackRock, and since we have the team itself has a DeFi background, we do a lot of liquidity provision deals. We syndicate capital from investors and deploy into DeFi protocols like lending markets, for example. So we launched actually the platform just four months ago, deployed our first 38 mil into 4 deals. So now we operate only for institutional investors. We do not serve retail investors. But for the next year, we hope we'll launch the first pilot. It's going to be a basket, a retail basket, which is composed of multiple assets for the retail. And for institutions, we provide direct deal access.
Also updates since we last spoke, actually. So thanks for that. And Emmanuel, tell us about GemX.
Perfect. Thank you for having me. Yeah, I've also been in the space since around 2017. Started off in general IT consulting, development. I had a client back then. We did a data project with them. They tokenized Teslas in Vienna. It's like a ride-sharing company. And then I also had a company that basically just sold gemstones. And they had the issue, the gemstone company, that they had very expensive stones, 1 million plus, that nobody, could afford. And even if they could afford it, they would rather have, like 10, 100,000 euro stones because they're much more liquid, or even smaller tranches. And so, seeing that on one side and seeing that issue on the other side, we kind of connected it, and we started building a very small project back then, heavily retail focused. Actually not really in the Web3 space, mostly in traditional investment, but it served as kind of a proof of concept. And building on that, a family office, family office approached us that had already significant mining operations in Brazil and was one of the leading, gemstone dealers, gemstone entities in the world. Having made their money in commodities, copper, silver, and being one of the biggest aviation financiers in the world. So this kind of gave us the boost 2.5 years ago to, take this on a much larger scale, not focus as much on retail, but more on institutional clients. So now we work with family offices, banks, even funds to basically build products in this opaque market. So we have already built some TradFi products at first. It started off with a fund in Germany and a sovereign wealth fund of Jersey, and then GemX 2.5 years ago, really to focus on the Web3 space. And the innovation, so to speak, that we are really focusing on is not, as the previous project that I mentioned, tokenizing single stones, but rather creating a standard with portfolios. And the way it works is almost like the US dollar index. We take a portfolio of around 1 million worth of emeralds with the most relevant quality grades. So those are the most liquid ones that are constantly being sold and in jewelry stores. And we create this $1 million portfolio, and then we basically multiply it as much as we need it. So then we have, the ability to do $100 million portfolios, but only ever need to reevaluate the initial one with live market data and the leading gemstone laboratories in the world. And we obviously work with the leading partners in this field, tokenization with Fireblocks. We have our proof of reserve Chainlink. We have Signum Bank onboarded. We have Zodia Custody for our clients. So for us, the most important thing, as you will probably be talking about later on, is data, verifiability, transparency, and proof of reserve, really. Yeah. So that's GemX, based out of Switzerland, and building that.
Thanks, Emmanuel. That's great to know. And I actually noticed that all of us apparently had been in the space since 2017. I don't know, maybe that's the ICO boom that sparked that. But yeah, myself, I also actually started to look into the space back in 2017. I was based in Taiwan. I think most of you know that I'm in Hong Kong right now and working in fintech here since 2019. But before, I was in Taiwan and I worked primarily in consumer tech. But my friend reached out to me from Eastern Europe asking to source GPUs. And I was like, what's a GPU? That's for gaming. Why are you in gaming? And he was like, no, that's for mining Bitcoin. And go to those tech conferences and find me suppliers. And that's how I got into the space and got to learn about Bitcoin and proof of work and stuff like that. And then more recently, like the past 4 years, I'm full-time working with digital assets. And it's been a journey. At Defactor, I'm with them pretty much almost for 3 years now. And I think what's brought me, for example, for myself personally, to step into the tokenization of real-world assets space, I think it's the FTX crash. Like at that time, I was working at a custody firm, and I just saw so much happening in the market where things were, very unstable, and people had been just jumping between projects, trying to find some tangible value behind them. And for me, it just seemed like traditional finance is the closest to that, part of the crypto space, which is RWA. And so far, I had seen it grow so much that I really don't regret moving towards this side of the digital asset industry. And so since all of us had been in the space for so long, I wanted to actually quickly ask a question that I didn't, we didn't prepare for. Like, what's your, I suppose, like main observation? It's going to be, 9 years that you're all observing the space very closely. What is that one thing that still keeps you in this industry and keeps you motivated? Besides, except, I mean, despite those crashes like FTX, and we've seen a lot of different bear markets as well in the span of these, almost 9 years. I guess, Dennis, what's your one thing that keeps you up at night and not regretting the crypto space being your focus?
Actually, many factors. I also run a Carbing Group VC, which is my small family office early stage venture firm, and I hold equities in 5 companies. So I have to protect my investments, right? So help them, to grow. So I cannot just exit the market. So I have to allocate 100% of my time, to let my portfolio grow. This is, I think, one of the major motivations for me. But actually, look, what other industry could compete with the blockchain? I mean, in terms of potential, I was so inspired with actually not with Bitcoin exactly back to early 2017. Yes, that is amazing, but mostly with the smart contracts, which were represented by Ethereum. And I think we're still early, right? I mean, it's a still blue ocean, I would say. Yeah, I love what I do. I mean, I'm in this space almost 10 years, and it's maybe for me it's too late to to switch to another industry. Yeah.
Okay, Klaus, I hope you have a different answer to that, but yeah, share with us the reason why you are staying in the tokenization space.
I've regretted it many times, I have to say, because I think joining such an uncertain industry that is in conflict with regulators and banks and so on seems foolish from the outside. But I think that for me, it's due to the motivation that I have. I really like the idea behind Bitcoin. I'm a Bitcoin maximalist, and I really believe the ideas and the vision behind it. But I also really believe and feel deeply for the ideas behind the blockchain technology in general, right? The ability to disintermediate and to get functionality lifted out of the banks and into the open, right? And making it much more transparent, democratize banking, unbanked people, and so on. I really do believe in that, and I think that we can potentially do good in the longer term, and that's what keeps me from going back to TradFi or something else, because I think frankly it's been quite a ride the last 7 years with a couple of crypto vendors and so on. And if you don't join this space just for the money, I would say.
Yeah, certainly. I think anybody who joined the space for the money and went into speculations probably exited the space already by now, because otherwise that's too much headache and stress in this industry. Emmanuel, what keeps you in the industry still?
Yeah, they say democracy is the worst form of social governance, except for everything else. And I think it's very similar to the crypto industry. It's the worst, except for everything else. Like if I think about being in traditional finance, sitting in banking, I think the alternative is much better to be in the Wild West. Yes, there's a lot of uncertainty, but it must have been, I feel like it must have been the same in any times when, new things or innovation or, creative disruption, upheaved, traditional thinking patterns. I feel like it must have been very similar in the Industrial Revolution. Not everyone was, there was a lot of people left behind during that time as well. And not everyone, was taken with on that ride. Having said that, I still think that the evolution since 2017 has been very positive and interesting. And I think, big, let's call it crises like FTX and such, or Terra Luna, are needed in such a novel industry. It was similar in the internet boom of early 2000s. So you had a lot of not sustainable business models getting tons of money and then failing. This is needed for industry to mature. So while you're when you're in front of that issue, it almost looks like a huge mountain, but sometimes you take the outside view and it's only like a molehill. So this is kind of my look at all of this. So yeah, I'm still very, very positive.
That's good to know. We're all staying positive still. I guess let's just dive into 2025. It's been quite an interesting year for tokenized assets. A lot of things happened in the market. A lot more presence, I would say, across the global events. You guys I think most of you had been to our Real World Assets Get Real flagship event with Defactor that we've hosted. I forget how many times this year, but I think more than 3-4 maybe times this year. And the more we go to these different conferences and host the side events, the more crowded is our own side event, but also the more crowded is the list of side events focused on RWA. And we've noticed a lot more growth in that area. The next bigger sort of event is Consensus in Hong Kong, at least for me. I know that we're all in different parts of the world, but at least in Asia that's kind of a big deal. And in February during Consensus, there's already quite a number of RWA focused events and discussions. So that's certainly the kind of space that is only going to grow in 2026. But I wanted to kind of review the 2025, like what has been your sort of biggest achievement with the project. And I'll start with Klaus and DigiShares.
Yeah, I think generally it's been a great year for us, and I hope for the rest of the industry. Business has really been picking up, especially since the summer holidays. We operate globally, so we observe global trends, I would say. And for now, what I think we see is that the globally it's been picking up, but especially the UAE has carried forward a lot of new business, a lot of new traction. But the US is starting to pick up as well, and I think the same thing in Europe. So for us, we signed up, I think, around 36 new clients, which is quite good for us. And we're still working on the last few deals of the year. And these are in, I would say, four regions, right? So the UAE is number one, I think. And then Saudi and the surrounding countries also account for quite a few new deals. The US is a large chunk, and then the European Union is the last one, I would say. Asia is still, we don't see Asia so much, and I think that's for regulatory and legal reasons primarily, right? It's hard to tokenize anything in Southeast Asia without a very expensive license. We've also been very busy on the event front, and we've done at least 6 or 7 physical masterclasses, mostly in the UAE, but also I think 1 or 2 in the US. And then we've done more than 10 virtual webinars on different topics, right? So, and it's been well received and well participated. So yeah, pretty good year for us.
Thank you. Thanks for sharing that. And yeah, I've been to a couple of your webinars. That's great to have virtual things still happen, even though COVID ended. But I think that's one thing that we all kept from those days when everybody worked from home.
Yeah.
And it's certainly good to have that format. That's why we're having this discussion. Dennis, how about you? What's been the biggest focus for Liqvid in 2025?
Oh, so actually, for us, 2025 is the year when essentially everything started for us, because we incorporated a company in January. And by the end of June, we had built and launched our V1 of the platform, the first live version of the platform, and started to onboard the capital allocators. And as of today, the allocators connected to Liqvid represent roughly 5 to 6 billion in aggregated AUM, which is nice, I think, because we're live for like 4 or 5 months now. And by the end of June, we launched the platform and deployed first like tens of millions of dollars, like almost 40 millions. The plan was actually to hit, this psychological mark of 50 mil, but we're gonna deploy in January, and complete this target. Also, we've got great support from blockchains. I mean, the ecosystem. So we got quite significant grant from Stellar, and just 3 days ago we signed also a grant with Arbitrum, and that's great because I mean, it shows the interest of the ecosystems that they want to attract, companies who are tokenizing like real world assets, financial assets that we are focusing on, because we don't do commodities, we don't do real estate, we don't do fancy watches, we don't do cars. We just, focused on financial and yield generating assets, I would say. And that's great to have, their support. I mean, the year was quite intense, but we see results, and we hope everything will be fine next year.
Yeah, the results is definitely what's the most exciting after you're building a project, especially if it's a startup. And I'm sure once you deploy the capital in January, you can still tell people that in the year of snake, according to the lunar calendar, in that year you still made it 50 mil, as January is still in that.
We'll account for the previous year.
Yeah. But yeah, exciting stuff. Emmanuel, how about you? Can you share with us what GemX has focused on in 2025?
Yeah, for sure. I think also maybe 3 big things that I can mention. So first is structure. So we were able to fully control the supply chain of the emeralds, which allowed us to build several interesting products. One being a yield-bearing product. So since we are not just controlling the access to the mines, we also have the cutting and polishing, the trading desks, a laboratory that is still third party, but we have very close ties to now. Another laboratory that is completely third party and checks again on the quality of the previous one, and then also traders and eventual funds. So through this supply chain, we were able to set up a fixed interest yield product of 15% per year. For 100 million allocation, which we already, it was set up around September, November, or October, which we already filled half. So that's 50 million, the magic 50 million there, which is a very good sign for us going into next year, because it also fills up our, total token allocation as well. And then we had obviously our TGE this year, for the Emerald token, which is a great first step to also be able to launch several other gemstone focused tokens in the next year, and then eventually our long-term plan of building a stablecoin on top of this. And the most fun milestone that I would maybe mention, obviously, our offline events that we did this year. So the biggest ones being, we did one in Davos with CV Labs, Paris Blockchain Week, and just recently in Singapore, we hosted the Tokenized Capital Summit with Gamma Prime, where we had Arthur Hayes and Anthony Scaramucci, and that was really, I would say, is always the highlights of my year, because we have a lot of online meetings and webinars, but getting to meet the people in person, having dinner, enjoying the cities, and at that time it was Formula One. I think that is always gives us a little bit more spark to engage in the industry.
Sure.
Yeah.
And I actually didn't know that you organized that event. I went there, and it's a really good one. I think you guys are having another one. Are you planning the one in Hong Kong, or was it just recent in Abu Dhabi? Because I keep receiving
Abu Dhabi is the one where we are more involved in, and then Hong Kong we're still on the fence how much we're going to do. But yeah, Gamma Prime is always the one.
you co-sponsored.
We're co-sponsoring a lot with Gamma Prime now. Do a lot of dinners also with them.
I see. Excellent. Yeah, that was a great event. I actually met a lot of traditional finance people in there, so that was quite relevant for, I guess, like for bringing the digital assets industry a little closer to the traditional industries, which I'm always, you know, always for that, and supporting that idea. I guess like just briefly on Defactor side, we had finished the year with a couple of new clients, and we decided that in the next year we wanted to support them, or not just the current clients, but the future clients and potential other projects that are growing within our ecosystem that we had spoken to in the past couple of years. And a lot of them were small, a lot of them were just figuring out the product market fit. And the space had evolved a lot. A lot of the projects that, for example, kept coming to our events, they all kind of achieved different milestones, and some of them pivoted. So in such an evolving space, the RWA industry is kind of becoming, we decided to launch a grants program end of this year. So we've announced that already. That's 250,000 funds that is essentially offered to a few projects that we're now screening that are actually actively applying for it, which to be honest, I'm quite surprised because that's only mid-December that we've announced it, but we didn't really promote it. And I've already had 10 calls with projects that, really kind of shows I guess, the interest that is still there in the market, and everybody's trying to grow. So we're going to support them on the sort of technology side, but also marketing, and having brought different partnerships to them. And then also another, I guess, big milestone for us has been that we've launched a data platform about now 11 months ago, but that's essentially the platform you're all familiar with. That's RWA.io. And I wanted to showcase a little bit of the platform here, just so that we have something in front of, I guess, our eyes, and people that are watching this webinar can also understand how Defactor sort of come to this. So basically, can you guys confirm with me that you're seeing oh no, not yet. I guess now you're seeing this, right? So the RWA.io platform sort of evolved from the experience of us talking to more than, I don't know, 400 or 500 projects in the industry that are building in the tokenization of asset space. And these RWA projects are all looking for more distribution, more exposure, more sort of like eyeballs on their brand. And we decided to launch a data platform because essentially bringing more transparency to the market. That's what we think is now a lot more needed than before. Now that there's a lot of projects are bringing assets on different chains, actually, EVMs sort of still dominate the space, but there are different protocols, different L1s that are actually focused on RWAs, which is also quite an interesting trend. And then basically nowadays what we've done is that we've had over 400 pages for different projects, and you can see that they're all across different asset classes. And these projects now can go and verify their page, which all the three of you had done, and I'm very grateful that you're supporting the growth of this ecosystem. Verification hopefully wasn't too difficult, and it's meant to be a very quick and easy process where essentially the project can say themselves that they had verified that this is their data, it's properly synced, and it's not the RWA.io team that came up with the data. That's essentially all part of the data platform. We're not yet the Bloomberg of RWAs, I would say, because of course Bloomberg has a lot more history and success in the industry to be that one-stop shop and terminal for all things data in the capital markets. However, I think we're on the right path to having that, and basically diving into different asset classes would allow people to navigate the space and figure out like what they can do in the projects with the projects that are tokenizing various asset classes. And then essentially one of the, I guess, functions is RWA.ai, which is also something that we've incorporated in the platform. So that would be AI agents helping navigate the space. So you would be able to ask them, for example, I'm in Hong Kong. If I have 10K and I needed to deploy it across 5 different projects that are tokenizing commodities, like what are these projects? Do they have project tokens, or do they have just the assets that they had tokenized with different, precious metals, be it gold, silver, platinum, etc.? So I guess the gist of it is that the AI should help users navigate the space and then essentially interact with that. So there is, for example, a DeFi functionality where people can borrow against project tokens. It's like a lending marketplace. Then there's a big part which is intelligence, and I hope anybody who is looking to learn more about the space will read our report with Coinbase, Franklin Templeton, and 14 other co-publishers that just came out, I think, almost a week ago. So that's something that we're also doing under the RWAIO team to bring more research, bring more insights and thought leadership into the space. So yeah, I mean, that's been quite a journey, I guess. From Defactor side, we had seen these projects grow, and finally now having that data on chain, having something to showcase, and we're very happy that the space didn't, I guess, turn into another meme coin boom or something that is just there with something non-tangible and made a lot of people reach and then went away. Like, this is actually something that is proving to stay around. And yeah, and also I'm just personally happy that I can explain to my mom what I do, and she kind of understands that. So yeah, I mean, I guess jumping on to the next question, staying within the topic of the data in the RWA space, what's your take on RWA data in general, and what aspects of the data that you think need to be improved, and what you're looking to, I suppose, from that space to improve and evolve, especially around the data that each of you are focused on? And I guess I'll start with Emmanuel, because we've just sort of scrolled through a bunch of precious metals, which is still on my screen. So maybe you can share with us.
Yeah, I think it's really important. I mean, so when I scrolled through Twitter or X in the last year, there were so many reports of, this and that tokenized another 10 billion or 10 trillion or, like crazy numbers. And a lot of the times that didn't actually, maybe it was just marketing, or maybe it was the real assets were, evaluated, very generously, and it didn't fully make their way on chain, and it wasn't fully coupled with what we see off chain. And I think now, and I'm if looking into 2026, I think going forward, this data is becoming more and more robust. The time when BCG came out with their report on the tokenization of trillions worth of assets, I think we're now getting more and more realistic, but the growth is steady, and what's actually growing is real. So the connection between the assets that we see off-chain and on-chain is getting more and more robust, and platforms such as RWAIO or DigiShares, they're helping to build that transparency. For us, that is why we started off with this proof of reserve process involving traditional companies like Grant Thornton for a proper audit, and then also Chainlink and Fireblocks and Gubelin GemLab to fully make it transparent how much there is offline, give the token holders the ability to even redeem it, so even check out the physical asset if they want to, but also take advantage of all the magic of the blockchain, using DeFi, trading it 24/7 and whatnot. So I think this decoupling that we've had between off-chain and on-chain is slowly getting smaller and smaller, and this is very important in terms of data and data platforms.
Thank you. Thanks, Emmanuel. Klaus, would you like to share with us your point of view?
Yeah, I agree very much. I've also been quite irritated and frustrated by seeing projects announcing billions in tokenized volume, right? While in reality, in many cases, it's been just like a share cap table that's been tokenized and nothing has been done with the tokens. So it doesn't make sense. We definitely need this cleaned up, and we need to become transparent, which should be one of the ideals behind the blockchain technology, right? So I fully support what you're doing in RWA.io, and we have set up our profile, and will be hopefully enlisting a lot of our clients in on the platform, so they can start benefiting from it. I think there's this transparency around data is a part of a longer trend for consolidation and growing up of the industry, and making it more interoperable, and also an element towards better liquidity. So it's critical for what we're doing.
Yeah, thanks. And I think, we at least have Dennis here with us, who is doing a lot in the liquidity space. So thanks to you and many other projects many other projects that are trying to solve the liquidity problem. I wouldn't say many others that solved it as successfully as you did, but at least there are projects that are trying. I guess besides liquidity, what else is in the data space that Liqvid is sort of wishing to have moving forward? Dennis, that's a question for you.
Yeah. Gotcha. Sorry, I was looking for the mic button. So first of all, I just want to add a few things about previous topics. Since we're sharing here invites for our events, last year we did actually 2 private closed events for capital allocators, and from my point of view, cash is a king, and demand for RWAs is what everyone is looking for. So we know how to tokenize, but it's also important to sell. So you guys are all a warm welcome to our events. I shared with you some links in our internal chat. So we call this event Institutional Horizons, Capital Yield and Liquidity. So it's only for capital allocators and deal originators and asset managers. So we're trying to connect and also run some panel discussions as well. So next time I think we'll be in Dubai and Singapore for sure, and Abu Dhabi next year. So we are planning at least 3 events for the next year. And reflecting on our experience of onboarding at RWA.io, it was really smooth, very customer-focused team, I would say. I think it's a great opportunity for founders who are tokenizing today something to have this early access to the platform and the full service from the team, and even like founding team. Once you become a big brand in a data space, probably you will be not that responsive. So I think it's great opportunity. So for the founders to be verified now and listed. So and talking about your question, actually there is no single universal answer, because RWA as a segment is not about one asset class, is a spectrum. You can tokenize equity, debt, public markets, private markets, cash flow instruments, commodities, and each of these requires a different data model. In some cases, you need to track, only prices and volumes. In others, you need to track factual events like agreements, deals, some events that happened in the real world, and everything depends on specific asset and its economic reality, I would say. So from the data perspective, the RWA segment is still a very, very early. The stage is very early, and one of the core challenges for the entire industry, I think, is this lag between real-world metrics and on-chain representation, and that's actually resulting the trust assumptions. This is what we do not like in the crypto space, in the blockchain space. Everything should be trustless. But in RWA, we still have this, trust layer, except public markets, because for public markets, they don't really suffer from this problem that much. Public equities have multiple data sources, transparent pricing, and aggregation mechanisms. But private markets that
where we are operating, like private credit, private equity, yes, we do have this, trust assumptions. So since we're still very early, we do see some progress, like oracles are improving, new infrastructure standards are emerging, and now we see more companies even trying to use this verification layer on the hardware level, using these enterprise chips from Intel, for example, where you can have competition done without, with the proof, like encryption proof that no one, changed everything, any data. That's great, but it's still very early. For us, yes, we do have some, these assumptions. Not everything could be trackable on chain and verified on chain. So what we do, actually, we rely on trusted partners who has licenses. So we have deal managers who push, NAV, net asset values on chain, but they are independent, so it's important. So this is what we do. Of course, there is still a big potential, move more on chain and eliminate this trust layer. But in my point of view, from our capital allocators, we don't see that many concerns. Because if they know you, they know team, they see how you structure the deal flow and the deal structuring, actually. So if you have, we call it institutional setup that they are comfortable with, yes, well, you have still some paperwork done in parallel with the, your on-chain deployment and on-chain asset issuance. That's fine, I mean, for them for now. But to scale, that is not enough for sure. So it should be improved, especially in private segment.
Thanks, Dennis. And I guess I'll stay then on this topic of improving the space. I wanted to ask you guys, what are the other parts of the tokenized asset space in 2026 that you're looking forward to seeing being improved aside from the data? So I think multiple times we mentioned licensing today already. I think the regulatory environment is probably the number one answer, which I think did improve. And seeing the regulators, not just in the UAE, which I think has been the most progressive one, but even here in Hong Kong, the SFCs treating tokenized assets in a very sort of like forward-moving way, and trying to adapt to the growing market and the growing interest from the institutional investors and the asset issuers. But I guess besides the regulatory part, which I think is definitely everyone's answer, what are the other things aside from data and regulations can be improved and can basically bring tokenized assets closer to the market and closer to being adopted by investors, be it retail or institutional? Emmanuel, what's your take on that?
I think first of all, I completely agree on the compliance part. It's still way too expensive to do anything in this space, but we have seen a much easier way or better way to work with regulators, especially in the European Union. I think MiCA was or is still a very positive sign, actually, and we work very well here in Vienna also with the financial market authorities. And also what we see out of the US, topic of stablecoins has been very positive for us. What I want to say, I think, is an important trend in 2026, and I think RWA is at the forefront of this, is the topic of adoption, because RWA is and you said it yourself, you can explain it to your mom, it's the easiest thing to explain to quote unquote normies. And for us, we're even one step in the traditional world, one step in Web3, explaining someone the benefits of tokenizing an emerald, or the benefits of a stable coin, or the benefits of debt on chain or private credit or whatnot, is so much easier than it previously has been, I feel like. when I gave a talk the other day and I explained them stable coins, and I was like, when I was a student, I paid, let's say 40 euros to have, euros be converted to pounds. And I waited 3 weeks for it. And then TransferWise came and it made it a little bit better. But now with stable coins, I can do that instantly, any time of the day, without pretty much any fees. People understand that it's a real use case, and I can show it, and it is beyond meme coins and making money. It's an actual thing that that improves my daily interactions. If someone has to pay their foreign workers and whatnot, I think this is a big trend in 2026 adoption.
Thank you. Klaus, what's your take on things that can be improved in 2026?
Yeah, I think maybe going a little bit against what you said, I think regulation is actually not really such a big problem anymore. I think in the US, Europe, and the UAE, the Gulf generally, we know how to operate within regulations. It's sometimes expensive, right? And lawyers are required, but that's okay. That's not going to change, right? But it's pretty much so. I would say in Southeast Asia, the situation is different. I realize it's not as fully developed. To me, the real challenge that we are starting to work on now is interoperability. So having joint standards for protocols and ID and data, I think is what we need to get in place in 2026. To me, it's frustrating that we have, I don't know, at least 10 different security token protocols used for representing RWAs on chain. So that definitely means that interoperability will be poor. And if you mint tokens on one of our platforms, it will be hard to process them in other platforms, get them listed on exchanges, use them as collateral for loans and so on, unless we move to the same protocol. So together with 30 other companies, we're working on a protocol called ERC 7943. I invite anyone to join who's interested. It's open, free, independent from any single vendor. So the clients will not be locked into a vendor ecosystem. They will be free to work with anyone across the industry who's supporting the standard here. And I think the next step for the standard would be to also incorporate some kind of decentralized ID. Thank you.
Thank you. And I suppose like one of the trends for the Christmas webinars is to have predictions for the upcoming year. So I wanted to sort of wrap this up with a question about 2026 and your expectations for the year. So I guess one expectation and the hope is that the things that you guys mentioned just now about being a blocker for the further adoption for tokenized digital asset, for tokenized real world assets, is that those barriers will be removed, or at least there will be some progress that is bringing the normies, like you said, Emmanuel, closer to engaging with tokenized assets on a daily basis, or at least weekly basis, hopefully. But I suppose, like, what are the one or two expectations and things that you are looking forward to seeing in 2026 regarding your project or the industry in general in the RWA space? And Dennis, we'll start with you.
Yeah, thank you, Anastasia. Just want to reflect on Klaus's point on interoperability issue. 100% totally aligned here. And that is why, for example, on Liqvid, when we issue assets, we issue them in omni-chain standard. So we utilize omni-chain stack of Asterism, which is similar to layer 0 OFT. I mean, the approach itself when you issue a token, which could be, burnt and minted on chain you want. So we support 30 chains now, and next year, actually, the major focus on non-EVMs like Canton. Stellar is live for 1 week now. Stellar, Canton, XRPL. So chains which are focused on asset issuance and stable coins. I would say chains that are now recognized as a chains for transitioning, TradFi players on chain, and they choose this chain. So we want to collect all these chains and connect them with Asterism. We've done, I think now, the progress is like 80%. And by the end of next year, we're going to be live on all these chains. It's tech heavy, but we have good partners, Asterism. So yeah, interoperability is super important. It doesn't make sense if you have some assets, sitting on I don't know, Stellar, and you cannot utilize these assets on Ethereum or on Base, use them as a collateral or build a structured product or combining different assets. That was actually the initial idea of Liqvid. To provide this omni-chain liquidity layer for RWAs. But then we started to build our own pipeline. Okay, whatever. Yeah, so for the next year and challenges, for me, definitely regulation. The clearance of the regulation is still a big challenge. We lack the clear and transparent in most of jurisdictions. Now we are very happy with what is happening in the US with the Trump administration and the Genius Act, and actually the second section of this legal framework, which actually is about the tokenization itself. But in many countries, regulation around tokenized assets is still missing entirely, or remains, difficult to understand. And this creates both, uncertainty both for capital allocators and issuers. From my perspective, this is the biggest challenge today, because we face it like every day onboarding. Even like when we onboard investors, you have to educate if they do this for the first time. Operate with the tokenized assets. Yes, we have a lot of now. Players and solutions, institutional focused. Custodians and reporting tools for taxation, but still it takes a lot of time, even this education, and especially regarding the US, with this Genius Act, which is important from the stablecoin adoption, because because stable coins is what is needed actually to purchase most of tokenized assets. So having this framework now announced and going to be live next year, that's amazing. US is a leading economy, and what is actually disappointing is the EU. European Union is MiCA, which is now coming to force, is not that much about tokenization itself. It's more, about, on-ramp, off-ramp, managing, and some about stablecoin issuance, but not that much about tokenization itself. And it's gonna be more transparent for all the players in 2-3 years. So Europe, unfortunately, is several years behind, at least US. And finalizing. Sorry, maybe I'm talking too much. The significant progress what was done in United Arab Emirates, where regulatory clarity around the digital assets and tokenization is advancing so rapidly. We do expect a lot of real estate gonna be tokenized in Dubai and Abu Dhabi in few years. It's gonna be a huge asset class that's gonna be on chain pretty soon. And we talk to many issuers right now trying to adopt this collateral for your liquidity purposes. Yeah, but still, I think that regulation, clear regulation, is still a big challenge.
Thank you, Dennis. It's I guess to your point about you mentioned earlier, onboarding on RWA.io was rather smooth, and then the founders and the top management team being involved, whilst the project is still quite small as compared to when we become a bigger corporate. And now comparing the progress in the regulatory space across different jurisdictions, I kind of always try to compare and bring it back to the traditional assets industries. Like recently, I went to an event where here in Hong Kong, it was a talk about Silicon Valley and startups there. It's, just for me, kind of diversify my exposure to different events and finally going to somewhere not fintech related only. And the talk was at KPMG's office in Hong Kong, and they had been in that building, which is Prince Building, in the middle of Hong Kong, busiest, business center, for 60 years. That was their anniversary recently, just having the KPMG office in Hong Kong in that building. And you mentioned the smaller team for the data platform that we have. Bloomberg had been launched, I think, in 1981, which is now like 45 years. And I think I just Googled it. Globally, they have 26,000 employees, which is obviously they have many different products, not just the data platform, but having the Bloomberg chat being, when I was previously working in the fintech space and in the trading technology for hedge funds, honestly, for trade execution, a lot of family offices and hedge funds are using Bloomberg because of the chat. They liked that one particular product, and then they keep using and subscribing to MSX as an execution trade execution app. And I was thinking just now, like, I think our industry actually has the advantage of using AI, because the AI now is becoming more and more advanced, and hopefully with all of the blockers that we've mentioned in the discussion just now, we as the newer industry, it is also very adjacent to AI, because I think sort of like RWA and AI had been the biggest trends this year in the tech space. I hope that we will actually advance a lot faster than it took for the traditional capital markets industry to build itself, back in the days when they established, how to be going IPO and how to do international trade and cross-border settlements. And, now we have much faster settlements thanks to a lot of assets being on chain. But also, in addition to that, I'm hoping that the entire user experience and the investor interaction with the assets will actually change, because the AI will facilitate this progress a lot, a lot more successfully than it happened in the traditional assets industry without any deep tech that they didn't have. So yeah, that's just my thought about how we potentially can evolve in 2026. Emmanuel, maybe I guess like really quickly from you and from Klaus as well, what's your expectation for 2026, and what are you looking forward to seeing?
Yeah, I quickly want to also echo what Dennis said. I think also what's happening in the UAE is extremely promising. We're also opening up an office there at the DMCC, the Dubai Multi-Commodity Center. And, obviously they've had a long-standing history with commodities, and we fit right in there. And, given the also the a little bit of romanticizing of, 1001 Nights, I think gemstones fit right in this space. So just want to mention that quickly. But for us, 2026, I think, is a year of scaling, not just in terms of clients, infrastructure, but also in terms of products. What we've done now with Emeralds has shown to be a very efficient and significant step, standardizing a product that is older than gold, 5,500 years, has been opaque for centuries, but has been used in financing empires, wars, peace deals throughout history, and getting that to a standardized, investable, and institutional framework, I think can now in 2026 lead us to do the same thing for several other gemstone products such as alexandrite, rubies, sapphires, tourmaline, whatever. We still keep our focus on Brazil. It's an ESG focused country primarily in that sense, but we'll also look into other spaces. Gemfields being one of the bigger players in emeralds and sapphires and rubies, and so that is the next step for us really in scaling the product. And also scaling not just on-chain, but also making it more decentralized off-chain. So currently our vaults are at the airport in Zurich, guarded by the National Swiss Guard. But we have plans, and they're rolling out next year, that we will open up vaults in Singapore, Dubai, and the US as well, and maybe even Africa at some point. So we are not just decentralized on-chain, but also decentralized off-chain, and you can redeem your tokens anywhere in the world almost to also get your physical emeralds.
Thank you. And Klaus, what's your expectation for 2026?
So we have a lot of things we are working on. We are also setting up an office in the UAE, and we work with most of the companies that are tokenizing in the UAE. They use our infrastructure, and we want to continue, of course, growing from this point forward, both in the UAE, but also a lot of very much focus on the US, which is our core market, I would say. I think that the US market will continue to grow in 2026, and generally, I think the crypto market will continue to grow, which is unusual, right? Because normally it's been coupled very closely together with the Bitcoin price. But this time it looks like the industry keeps growing and keeps booming, even though Bitcoin has gone down. So that's a new scenario for us, that hopefully we can have a decreasing Bitcoin price without a crypto winter. We've been hearing a lot of rumors about a crypto winter coming in 2026, but actually I think it's going to be later than that, if it ever comes. I think there's a real chance that what we are doing and blockchain industry, blockchain applications, and so on has finally decoupled from the crypto market, which would be a great scenario for all of us.
Thanks, Klaus. And I guess just before we wrap up, any other additional points that you guys might want to add?
Yeah, I can share some our plans for the 2026.
Yeah, sure, please.
Yeah, cool. So actually, plans are ambitious as usual. First of all, we want to continue onboarding capital allocators. This is where I think we are strong right now, but the plan is to scale the number of AUM of our allocators to 75 billion of AUM of our allocators. From attraction perspective, in deployed capital from Liqvid, our target by the end of next year is $500 million. I think it's achievable. And also talking about product itself, since now we tokenize only a single deals, we're gonna deploy into LP positions, and to provide the access to these LP positions to our allocators. And for sure, the initial idea of Liqvid, which was this liquidity layer where you can build a basket. Actually, the plan is to represent the first basket product. So idea is to let investors to invest in a portfolio of assets in one click. So the basket will be composed of assets sitting on different chains, EVM, non-EVM, and then combined into one master smart contract that is issuing the final basket token. And the final goal actually is to bring this basket products for the retail market. That's the ambitious plan for the next year. Yeah.
That sounds, I think that sounds actually as one of the most relevant. We are hoping also as well, because Defactor's tokenization module also facilitates what in the European Union, I think under the MiCA regulation, is called the asset reference token. So the token that can reference multiple assets, and for the totally traditional finance people, like that's something that means an ETF or an index, right?
Exactly.
And that's one of the hopes for us, that also that would be the trend, because I'm personally convinced that that's the easiest product to understand for the traditional finance people, because even in the traditional finance sense, retail investors are allocating to ETFs. Like there's very few actual retail investors as compared to those that are investing into ETFs, that are actually looking into individual companies and technical analysis versus fundamental analysis and all of that. I think the majority of people that actually keep their savings in the stock market, and they're still sort of relying on these indexes and ETFs. for the benchmark. So I'm hoping that our space will actually really grasp that opportunity and expand on that, which, technically in terms of the technical feasibility, we're thankfully fully ready for that. Now, I guess it's all about data and regulation and smooth user experience. And on that note, I would like to thank everyone for attending this and participating in the discussion. We're a little bit over time today, but hopefully that's an insightful topic that we've touched upon today that is going to keep everyone entertained over the holidays. And thanks for your expectations and wishes for 2026. I wish all of you to achieve the goals that you haven't achieved in 2025 and bring even more excitement into your teams and keeping people, motivated and excited about the space, which I think is always the goal for all of us building this interesting product. And yeah, I'll see you all in 2026 at all the various events that we've mentioned that we will host, and hopefully, also the webinars as well. Thank you.
Likewise. Take care.
Likewise,
Thank you.
Anastasia. Have a great holiday
Yeah.
time. Recharge your batteries.
Yeah.
Thank you.
Bye-bye.
Yeah,
Bye.
bye
Take
bye.
care, guys. Bye.
Defactor, from start to scale.